We've been living on the edge of our seats, month after month, waiting to hear the latest news on whether interest rates will rise or not. It's time to stop living in fear. Instead, let's focus on ways on how to manage this interest rate hike when it happens, because let's face it, rates are not going to stay this low forever. In this video, I will outline how an interest rate hike can affect you as a homeowner, buyer, and/or seller, and possible ways on how to counterbalance its effects. As the economy heads towards recovery, rising interest rates are a reality. This forecast has buyers, sellers, and homeowners on edge about what future interest rates will look like and how it will affect them. If you're a homeowner, let's talk about how this rate hike might affect you. For those with variable interest rates, a rise will mean that more of your mortgage payments will go towards paying your interest on your loan rather than the principal balance. However, for those locked into a fixed rate, an increase in interest rates won't affect your mortgage payments until it comes time to renew. So let's talk about how you as homeowners can prepare for a rise in interest rate. Let's say you have a variable rate mortgage and are uneasy about the changes that could happen. Most variable rate mortgages do have an option of converting into a fixed rate, so speak with your lender to discuss what options may be best for you. In terms of buyers, an interest rate hike will make the loan you're acquiring to purchase a home more costly. This may have some people leaning towards making the move to lock in an affordable rate now. However, be mindful of your budget when looking for a home to purchase. Be careful with potential bidding wars, as you want to be able to comfortably afford your mortgage payments when an increase hike occurs. Depending on the amount borrowed, even an increase of 1% can mean thousands more paid in interest over the life of your mortgage. On the other hand, if you're thinking of selling your home, now remains a good time. With more buyers attempting to lock in low interest rates and purchase before the hike, sellers still remain at an advantage of selling their home at a large profit. So when facing a rising rate environment, you need to consider what an increase in interest rate will do to your personal cash flow. Have a talk with your advisor about adjusting your savings and investment to make the most of rising interest rates. They may be able to help you find solutions that give a better return as rates move up. We can't predict when or how much interest rates will rise. However, we can be proactive and consider all the options so that we are prepared regardless of what happens to interest rates. I would love to hear any tips that you may have as a homeowner, buyer, or seller on what you're doing to gear up for the potential rise in rates. Please feel free to comment down below. Thanks so much for watching, and I'll see you in the next video. Bye.